Australian gas producers are under pressure as Asian buyers renegotiate long-term contracts to take advantage of cheaper spot prices. It comes as Woodside posts a 75% fall in net profit to $343 million. Shareholders will get a reduced dividend of 55 US cents compared to the 91 cents they earned the year before. Soft prices and a glut of gas are just some of the challenges faced by Woodside energy boss Peter Coleman. Peter Coleman, welcome to the business.
Thank you.
You're facing a couple of challenges. Obviously, we've had the US-China trade war. Most recently, coronavirus is impacting all sorts of industries. Woodside has seen weakened demand, falling prices, increased competition. How do you overcome all those challenges?
The results from last year showed that we have very strong underlying fundamentals in the company. We're able to save $2 billion and put it into the bank. Our break-even costs were on par to the lowest ever that we had, a 27% reduction on the prior year. And yet we're positioning ourselves for growth. So we are a company where the fundamentals are very, very strong, and we focused on those last year. These other things we don't control, but what we do control is how we respond to them and how well we are prepared for them. And we were prepared. We didn't know which one it was going to be, but we've managed our way through it. So eventually, things will get resolved. The issues around climate change will get resolved. The energy transition will get resolved. Coronavirus, trade wars and so forth will pass through those, and Woodside will be a stronger company.
The coronavirus has had huge impacts already. We've seen commodity prices pull back. How big of an impact will it have, do you think?
So we don't see a fundamental structural change at this point. The demand is still there. Manufacturing is still based in China and so forth. And actually there's some pent-up demand now being created in the marketplace because China is a huge supplier to the world of automobile parts and technology and so forth. So all of that demand is still there, and the manufacturing just can't pick up overnight and move somewhere else. So we think that will come back. The question will be, does it come back again? And if it comes back again, how does that affect confidence? And then do people start thinking about, from a risk management point of view, how much they've got invested in China? Do manufacturers start moving their manufacturing bases somewhere else? And does that change? And they're things that we just can't forecast at the moment.
Reports this morning that some Asian buyers are exercising their right in terms of their long-term contract to reduce that and then purchase on the spot market. Are you concerned about that?
It's pretty natural to expect that a buyer in this particular market is going to say, well, I'll probably exercise that down flex clause because it's cheaper for me to be able to go and fill up gas from the spot market if I need to. These longer-term contracts are at a much higher price. So I think sophisticated buyers are probably looking at that and saying, within my portfolio, I can manage that.
The Conservation Council of WA has raised some criticism of Woodside, saying that the Burrup hub will be the most polluting fossil fuel emitter that Australia has ever seen, saying it'll have a total carbon footprint of 6 billion tonnes over its 50-year life. That comes down to 139 million tonnes a year, saying that it'll be 4 times as polluting as Adani. How do you respond to that kind of criticism?
We all live on this planet, and we all want to make sure that it's a place that not only our children but our grandchildren can inherit and can be one that we've prospered under as well. So we have the same objectives. We both want to be net zero by 2050. And the reality is our major projects will have already produced most of their resource by 2050, including Scarborough and Browse. So we think it's part of the transition. I don't know where they get their numbers from. It's certainly not a number I've seen.
So they're not right, those
numbers?
I
don't know, because we just haven't seen those sorts of numbers. And of course, we can't respond when somebody just comes and puts a number out there without sitting down with us and going through that.
You've talked about Woodside's plan to be zero emissions by 2050. And I guess you sort of touched on gas being one of those transitional sources of fuel. What happens when that transition phase ends? What happens to Woodside then?
Woodside has made a deliberate decision a few years ago to focus on gas and LNG in particular. And so we are very heavy on gas in our portfolio, and quite deliberately, because we thought that gas will be highly prized in the future and gas will become more and more a global commodity. We've got carbon, and I've talked about that. We see that as a growth business for us over time. So we may become moved from being a net user with respect to carbon credits to a net provider of carbon credits.
Peter Coleman, thanks for speaking to The Business.
Thank you very much.